Nigel, we have the management of Galaxy.
Well, that's right. Let's focus on Galaxy Surfactants. They reported their Q4 numbers. Last year, it had various challenges. But let's find out what's the path ahead. We're joined by Mr. Natarajan, the Managing Director and CEO at Galaxy Surfactants. Hi, Mr. Natarajan. Good morning, and thanks a lot for joining in. Well, let's get two of the key numbers out of the way first. What kind of volume growth are you looking at for this year? I recall last year you were aiming for around 6 to 8%. This year, what kind of a number are you looking at? And the EBITDA per unit, that's the other one. I think around 20,000 is what you were guiding for last time around. So let's get both these two numbers out of the way first.
A very good morning. Thanks for having me on your show. As regards the volume growth, we would want to maintain the momentum that we have generated in Q4 and probably be still at the lower end of the guided range. We grew by almost 4% last year. We should be targeting doing that. And with regard to EBITDA per metric ton, there was a good momentum that picked up in Q4 compared to Q3. And we would want to be in the guided range of 20,500 to 21,500 per metric ton.
Okay, all right. Could you give us a broad sense in terms of your mix as well? Last year's specialty care revenue, well, that in fact saw volumes that were more or less flattish. And well, you had mid-single digit, I think, in the performance surfactant. For this year, what kind of a revenue mix are we looking at, sir?
In fact, see, India has been, from the second half of this year, India has been a challenge, as all of us know. And the mastic specialties in India, majorly, and to some extent in Africa, Middle East, Turkey got impacted. India was more because of the demand momentum decelerating. Whereas for Africa, Middle East, Turkey, it was more to do with the sort of supply chain challenges that we had. Moving forward, we expect the growth to pick up in specialties, mastic specialties as well. India, yes, we would want to be a little bit cautious as most of our customers are expecting the momentum to build up only from H2 of this current financial year.
Speaking of various geographies, sir, what is your mix between India, rest of the world and the other key markets? And also, I mean, what is the exposure you have to the US?
Yes, so India typically is about 35 to 40%, and your Africa, Middle East, Turkey at about 30%. And the balance is rest of the world. US is about 10 to 12% of our revenues.
And what are the conversations? I'm sure the last 1 month or so, you would have been in discussions with clients, sourcing, supply chains, all of that, because of what's going on. What's the sense? If the tariffs, I mean, they were announced at 26% blended. We still don't have individual product tariff lines. But what is the increase that you're baking in that you think that your customers will be willing to pay for? Will it impact your operations or not, specific to the US?
No, we see with regard to the US, the most important stuff is not about what are the sort of reciprocal tariffs that kick in. We are still into the 90-day suspension period. But all the customers whom I met over the last about 60 days are pretty apprehensive about the implications it will have for the demand growth. They expect that there'll be no choice but for them to pass on the increase to their consumers. And that certainly is going to be having a huge implication on the demand growth. But as regards the products that we supply into the US, there are some products that we do import from China, but then that's not something significant into our US operations. Whereas what we export into US from India and is nothing that is going to be significantly impacting us. Whereas from Egypt, there are no reciprocal tariffs. So that leaves us in a good spot.
Okay, all right. Just a quick question on fatty alcohol acid prices. That doubled in the past year, right? And there were hints that maybe that will cool off from here on. In the first quarter, what kind of a range are you working with on this pricing? And do you expect it to correct as the year progresses?
Yeah, so as we are talking, I think the prices are closer to $3,000 per metric ton if India. More than that, there have been huge issues in terms of on the supply side because many of the plants are shut down. There has been some gas outage in Malaysia due to the issue at Petronas. It's just limping back to normalcy. So we have on one end, you have the prices which are elevated pretty significantly high. And on the other hand, you also have supply side challenges that have come into the last 2 months. The prices we do expect with the high harvesting season now, I think should start cool down. And that hopefully should be able to give some strength to demand momentum building up in India, because India is pretty challenged in terms of high inflation on the commodity front.
Okay. All right, sir. We'll leave it on that note. Thank you very much for joining in. Appreciate you telling us more about the business. That's Galaxy Surfactants talking about the outlook ahead.